Welcome to the Scottish Property Podcast. This is a show where we aim to educate, inspire and entertain through real life stories and interviews from people in the Scottish property community.
As always, thanks for listening and give us a follow on social media and subscribe to our YouTube channel. Remember to join us at our monthly networking events on the first Wednesday of every month. Tickets are available on our website. So without further ado, we'll just cut straight into this week's podcast. Welcome back to another episode of the Scottish Property Podcast. We have a perfect guest here for this week's subject. It's buying portfolios. Stephen, you've just bought a 39 unit portfolio.
Mate, I'm in the hot seat, yeah. Buying portfolios is quite a topical thing right now, isn't it?
Is it one of the sexy strategies? One of the kind of the ways to pivot?
It's one of the pivot strategies.
So,
I suppose particularly in Scotland, because we've been hit with the 6% additional dwelling supplement rather than the 3% in England, it's people are looking for more creative ways to get around that, and one of the more creative ways to get around it is buying 6 or more properties to qualify for multiple dwelling relief. So that's what's making portfolios attractive.
So this is where you can save yourself the 6% basically on the purchase price.
Yeah. Well, it effectively comes down to almost around 1% of the purchase price. So you're probably saving about 5%. But then I think that's what's one of the main reasons what's making portfolios attractive that people are trying to go for, because, you'd soon get the wind taken out of yourself buying property at a time, single property at a time, and paying 6% on every single purchase.
Why is that? Is it because it goes through as a commercial purchase and you avoid the kind of 6% ADS then? Is that the idea behind it?
You get a relief called multiple dwellings relief. So there's a weird formula that only Sam Dyer's, I know, that's worked it out.
We probably should have had him in today for this one, but to be fair, we've only got an hour.
Yeah, and we need 3 hours for him to come on the podcast. So yeah, we'll get him for another time. It's basically around 1%. So if you're factoring your numbers on what tax you're paying on a portfolio purchase, it is around 1%.
Right, okay. So that's the first thing. Obviously tax incentives, especially now where, the basically government over the last few years have been pounding us as landlords. So what else potential, what attracts you?
Well, it's a way of scaling up your property portfolio quickly. If you want to reach 20, 30, 40 properties and buying them individually, it's going to take a long period of time. But if you can buy a handful of properties, I think between most buy-to-let lenders, if you have 4 or more properties, you're classed as a portfolio landlord. So then they'll lend you on portfolios because you've now got a track record and experience. There is ways around it of buying portfolios at the start. Like I think we had Barry Gray on that said that he'd bought portfolio for his first purchase, but he'd basically leveraged his power team's track record and experience by saying, here's my letting agent, they've got all these years experience and they know how to manage the portfolio.
What do you class as a portfolio anyway? Is it like how many properties?
Well, I'm saying lenders are classing it as 4.
4.
Saying you're an experienced landlord or you're an experienced investor. So they're giving you that, okay, your class as a portfolio landlord, will lend you on a portfolio. Mm-hmm. But the other thing which I think is key right now is there's such a unique opportunity, particularly in Scotland, because we've got the eviction ban, we've got the rent freeze, and we've got tired landlords in the mix there because of interest rates and extra compliance. So now you're sitting in this perfect storm of tired landlords. Now, well, I mean, let's just say you were a tired landlord, Nick. I've got 20 properties in your portfolio.
I'm pretty tired. Speaking to you about this subject.
If you had 20 properties in your portfolio you'd built up since the mid-90s, and you've had for the last 20 years in your portfolio, and you're thinking, shit, I'm away to hit retirement, time for me to exit this and enjoy my life, where would you sell them?
Exactly.
You've got no marketplace to sell them right now because of the Scottish government.
Except you and Sam Dyer.
But you are going to be looking at people that will buy in bulk. So you'd have to take a wash. A lot of landlords years ago used to take, they'd maybe sell one a year and utilise their capital gains allowance, but that's now getting done away with.
Well, the other thing as well is, usually you would wait maybe for a tenant to hand in notice or, sell maybe one at a time, but the problem now is that not many people are moving out because the rents are going crazy. So if you are your financial circumstances have changed, like you just explained there, and not many tenants are moving because rents have shot up so much. We were just discussing earlier, 13.5%. So tenants are looking at that. They might be in a flat £500 a month.
I'm staying.
Anything else round about is like £700, £800 a month. So you basically, you can't get them out. There's eviction bans as well. So you can't just, you can serve notice to get an eviction if you're selling, but it's a lot harder.
A lot harder. And just say you had multiple properties, if you had 10 properties, 20 properties, and the cash flowed you £3,000 a month, would you evict 20 tenants to lose your £3,000 a month cash flow and then pay all the costs associated with having that portfolio sitting empty to maximise the value of the property you can sell it for? No one can do it right now, and the Scottish government's made fucking damn sure they can't do it right now. So that's put investors that are looking at buying portfolios in a unique position. If you can position yourself to buy portfolios, you can get significant discounts.
How about finding them though? Because like I don't know. I mean, I only really look on Rightmove and all the rest of it, and within my network. But where I operate in Glasgow, I don't see flocks and flocks of portfolio landlords selling up. But maybe it depends where you are in the country. Are you finding quite a few portfolios up in Aberdeen?
Yeah, I mean, I'm finding them throughout the whole of Scotland that are coming through. But how I'm finding is portfolios are coming to you through your network. Maybe the landlord that doesn't have much of a network, the commonplace, if someone was going to put them on the actual market, is with a commercial agent. So you'll see sometimes they're listed with commercial agents because they're technically a commercial transaction, be an investor that's buying it, a serious investor. So if they have no one in their network and no one they think they can buy it from, they'll just put it to a commercial agent. So sometimes worthwhile touching base with commercial agents and asking if you've had any residential landlords looking to exit their portfolio.
How did you find that 39 unit one in Aberdeen?
So they were all through the network, because we've bought 4 or 5 portfolios.
What network?
Just your own network, just social media. So that portfolio of 39 came to me through 3 different people. First, it was a friend of mine who I went to school with that owns a stove company, and the guy was his client, and he says, I've got 40 properties I'm looking to get rid of. I'm in my 70s. It's time for me to exit. And I kind of done a bit of desktop appraisal and offered them offered them 30% discount on it. And he said, no, I'm only taking 10%, no more. And I says, in Aberdeen, I can get 10% on the market on a single property. I'm not going to buy, £4 million of property at 10% discount. And then it came back through the letting agent contact. Someone's reached out to us. They're looking for portfolio. Same portfolio.
This is knocking about now. It's kicking about.
Once they start, they start dropping it into their network, and people will word of mouth will spread. If you're seen as a serious investor and someone that's capable of doing it, then they're going to end up to you. Then it ended up coming on the market with portfolio. So we thought that we've had
agent.
Yeah, an agent that specialised in selling tenanted properties. So yeah, they'll come through the realms of your network or your immediate property network. I had someone reach out to me 2 weeks ago because we'd bought a portfolio of 5 properties in Aberdeen about 4 or 5 months ago, and someone had said, "Oh yeah, you've just bought my portfolio from my friend. I'm looking to sell 6 properties again," and we bought them at 38% discount or 38% under the market value. So if they've been referred from their friend and it was a nice smooth transaction and they took 38% less, if they're referring them to their friend, you like to think that they've already set the scene up front saying, well, you're not getting market value, I got 30% less or 38% less. So if they're coming to you, they're already motivated, you've already got that realm of expectations or the expectations are quite clear that you're not paying market value, you're an investor and you're maybe one of niche investors that can give them a solution. But it's not going to be anywhere near market value. So I think there's opportunity there. Most
people will think portfolios, they'll think big numbers, hundreds, I need hundreds of thousands of pounds. Because obviously if you take 10 property portfolio, average ones, I don't know, taking top level figures off the top of your head, it's £100,000 each property, you're going to need £25,000 for each. Oh God, that's like 250 grand I need.
No, not necessarily.
So how does that, that obviously doesn't fit in with your strategy. No. So how do you make it work in terms of the numbers and then negotiating discount and stuff like that?
Yeah, not always. I mean, the portfolio of 5 properties, it was at 38% discount. Because of the discount, I think we only needed about 60 grand to do the deal in total. So you're not needing a huge amount of cash required to do it. It depends on how you want to finance it. If you want to borrow private investors finance it and then exit onto long-term debt, or you can take a bridging loan out. Now, some bridging lenders will lend you on the market value and not your purchase price. So if you've negotiated a huge discount on it and they're already taking into consideration what the market value is, you'll get a whole lot higher loan to value. And obviously that's just short term to do the acquisition. You want to then exit onto your long term finance and refinance onto a buy-to-let mortgage at whatever loan to value you want to put it at. So yeah, you'll be surprised at how little capital, I'm not saying little capital, but not as much capital as you would think would be required. There's definitely ways around structured portfolio purchases where you don't require as much capital.
And, on that discount, so like for me, I kind of look at that, somebody who's not done it before, and think, well, that must be quite crucial, getting the right price, obviously, agreed. So like, I know it's not a straight formula to what percentage of discount. I mean, again, it's going to be negotiation with the seller, and it's going to depend on where you are in the country as well, and the market rates and all the rest of it. But
yeah, that's it. But you're not dealing with an individual that's selling their home or a property that they own that they've got an emotional attachment to. You're dealing with an investor or a landlord who's treated this as some form of investment. So they're aware that if they can't put them on the open market and the masses can't buy them, and you've got a handful of investors that can maybe buy them, they know they've got their exit pools very niche. So they're not stupid. You're dealing with kind of someone that's a bit professional that knows that I'm taking a wash, and it's like I'm taking some kind of discount on this to get the exit that I want. I need to give a discount. But the due diligence process on portfolios.
Yeah, where's the starting point with that then? Because like, okay, somebody's got a portfolio, like say for example, Portfolio.
Yeah.
They're selling it on the open market. You inquire, you get the details. You're probably going to get a spreadsheet, aren't you?
Yeah, most likely.
With like addresses, rents. You're looking at.
There's two different types of due diligence to it. The fundamental key for portfolios is you do the due diligence on each individual property. So you'll just basically do it as you would for buying any individual property you're adding to the portfolio. You'll do that multiplied by 10. So there's a bit of work involved in it. But the biggest thing that you need to learn at the back of it is the due diligence on the tenants, because the tenants could be the fucking asset or the absolute liability, depending on what you're buying.
Okay.
So you need to make sure you need to go over, because they'll be with the way the market is right now, you'll most likely be buying tenanted. So you need to go through the property compliance, make sure that all your EICRs are in date, gas safety, Legionellas, your inventories are all checked in, your checking inventories all in place, all the compliance that you would do as a letting agent. You need to make sure that that's all done. Look at their rent roll. Is their rent up to date? Are they paid? Are there any arrears? Stuff like that.
I would imagine that if the portfolio is managed by a professional letting agent that's good at what they do, that would be quite straightforward.
You would think so, wouldn't you? But no, that's fucking definitely not the case. The amount of times that we've looked at portfolios and you dig through it. I mean, the last one we bought, the guy that owned it had managed under an agent. He was an electrician to trade, and his EICR was out of date. Like, so you would think it would be, but no, there's
no way you would have picked up on that. No way.
Absolutely, we did. Sam did.
That's what I'm gonna say.
No, there's a different level of due diligence required on portfolios, and you're almost like an asset manager. Like, you're almost taking on the asset, at a certain price, a certain value. The rental income you can't really do much about right now as well. So you have to look at what the market value rent could be. When are they tenants going out, and how are you going to asset manage those rent up? What's the property conditions right now? Are you going to be able to use the cash flow to manage the property to a better condition to lift the value up if you want to pull more money back out or pull your money back out? So there's definitely a mixture of strategies involved in it. Do you want to keep all the properties, or do you want to? Because you can, if you're buying in bulk, why not trade some? You can easily trade some properties. If you're buying 10 properties and your numbers stack up that you're not getting a huge discount to keep all 10, why not sell 2 or 3 and you walk away with 8 that's left you with no money in the...
Because you've done that before as well, haven't you?
Yeah.
Down in Kilmarnock, I think it was. Or...
Yeah, there's so many ways to skin a cat when it comes to portfolios, but then it's flexible because you're buying, I suppose, in bulk at discount. You've got that bit of flexibility to deal with.
So see with the valuation process, right? So say they value... Obviously, if you get the addresses and you get the size of the properties, then you can obviously go on Rightmove house prices and you can get a valuation, right? But obviously, the condition, you don't know the condition. Is there a home report? Is there going to be a home report for each property that they're selling with it?
Nah.
No,
not necessarily. So, not often, yeah. So you need to do your own due diligence.
So this is where I would be very cautious, because like I'm not a huge risk taker.
Add that into an Aberdeen market like where the 39 was, because you don't have any sales comparables I've went through in the last few years, and if you do, it's been 39.95 or investors buying properties at discount. So you're really relying on what your valuation is, not necessarily your sale price.
Right.
So with that, you could, but this is where you mitigate the amount of due diligence you do in a portfolio. You just mitigate that risk continuously. So we mitigated that at the discount we had agreed. I think it was 27.5% discount or whatever the number was on the valuations that we got back from our lender. So the lender's going to come out instructed by the bank. Right. They're going to safeguard it.
And do they go around every property?
Every property.
Which you need to pay a fee for.
So yeah, there's the cost associated with portfolios. If you're buying one property and you pay £400 for a valuation report, you're paying that times 10, times 30, times 40.
Right.
So there's a whole lot of costs associated with it, and that's before you've even concluded misses and signing the deal. So you could put in 10 grand into valuations and fucking lose the deal. And
so wait a minute. So see these valuations that you're getting from your lender. At what point are you agreeing the purchase price after you get the valuations back?
I tend to agree them up front based on the valuations.
Based on the valuations.
So basically, you can just, it's up to you and how and obviously the vendor. But if you, there's many ways of skinning a cat. But if you had a rough price agreed based on what their valuations they think it were, but if they were, you could say, look, here's my discount. It's 20% discount, 30% discount based on your valuations. But if they come back lower, the price is reflecting that. If they come back higher, the price is reflecting that.
Right.
So then they think they might chance of getting more money. If you've done your due diligence right, you're going to be offering less. But you have to make sure you've got them at least lined up to the point that if this comes back a whole lot lower and there's my offer, you're still going ahead with this. Right. Because if you put in 8-10 grand of valuation fees and the guy goes, no, I'm not fucking
and you
selling
better hope they want to negotiate, by the way, because like you say, you've just spent £400 per valuation.
Aye, but you negotiate that up front. You do all your due diligence up front, and you have those conversations in depth during the process. But buying portfolios, there is a hell of a lot more to it because it's multiple properties, so you have to do the due diligence on the properties, the due diligence on the tenants in place.
Do you ever try and view the properties?
Yeah, aye. I tried to view, on the smaller portfolios, we view every single one. On the 39, we selectively handpick 6 to view.
The worst ones, hopefully.
Well, we tried to find the worst ones. And how would you find the worst ones? You look at
the lowest rent?
The lowest rent, the tenancy start date. So one of the tenants had been in since 2004. So you want to go and see that one, don't you? So we kind of strategically handpicked 2 or 3 in each block, but the ones that we thought these are going to be the problem ones. That's got the lowest rent, or that's the longest lease, and or do you know
that latest one was all kind of, a lot of them were all in the same building as well, were they not? So that helps, doesn't it?
Aye. So it helps if you've got 10 2-bed flats at 47 square metres. You can just do the due diligence on one, check a couple of them and go, okay, we're happy that the conditions going to be similar conditions. You've kind of got a multiplier on the due diligence on there. You don't need to go through each individual one, but you still need to check all the safety certs for every single property, the rent roll.
The rent statements are going to be crucial, aren't they? Because you don't want to be buying a property that tenants like in 2 years worth of arrears and they've not been able to get them evicted, and you're going to, basically that's going to be a problem for you from the word go.
Well, that's like, imagine buying 5 or 6 and 1 or 2 of the prop tenants were an issue. Then that's critical on the portfolio. On 39, not as much, but it's still a huge part of the due diligence to make sure you look at all the rent roll, make sure none of them are in arrears.
And how much do you think you can trust landlords and letting agents when you're seeing these financial statements as well? You know, like, I mean, you would hope, I mean, if somebody came to me and said, issue me the rent statements.
You've got a professional,
I've got a reputation, so like I would be forthcoming. But say it was like a private landlord without an agent or without a business, and it was maybe 12 properties and all that, you would hope that they weren't just making it up.
I'd want to see bank statements and stuff as well. Make sure you can prove the rental income's coming. Yeah, I'd push that a little bit more. But yeah, again, that's all part of the risk factor, I suppose. If you're buying 10 properties from a landlord who self-manages and you're not I'm not too sure my compliance is for that one, you're taking a big risk. Whereas the ones that we've bought are generally, especially the bigger one, which thankfully was all managed, all compliant, all the rents are in place, all the deposit schemes is another one. You want to make sure you can be able to trace where the deposits went to. There's no point in a tenant moving out a month later after you buy it and going, where's the deposit? Or I gave the boy it cash. It needs to be checked with the traceability. So there's a whole lot.
What about the hot topic at the moment, the EPCs? Did you spare any thoughts to EPCs?
Yeah, EPCs put them on a spreadsheet and make sure that
did you have them carried out independently before? Or no, they would have been done anyway to comply, obviously. So that would be part of the compliance that the agent would have.
Yeah, it was part of our checks really to look at the EPCs and look at where they're at. But they're all, again, this is I suppose a topic on one of the podcasts we recorded today on the EPG changes. All the 39 have got electric heating. So we're hoping that when the way they assess the EPCs is shown more favourable for the heating that's in it rather than forcing you to go gas. So that hopefully helps. But I actually really enjoyed the process of the 39 unit portfolio because the guy who was selling it, got to know him quite well and asked his back, so he took him for lunch and stuff. And he had acquired them all in Aberdeen when he was working for Shell and BP and big oil and gas companies. And I think he ended up retiring at 54 and pretty much just managing the properties remotely. He still used an agent, but
he was just basically scunnered with it, tired.
But for the last 20 years since he left his oil and gas high flying career, he's basically been the property maintenance guy. So as much as they've been managed by an agent, he's been the guy that comes out and does all the maintenance and fixes them. And
what age was he?
He was about 74. 74, 75.
Do you think there is a kind of like a demographic there where obviously it is, because people like ourselves are in it. I know we've been in it for a while, but just lately we've been building the portfolios. You
mentioned this a few episodes ago when you spoke about the legacy and the stuff you leave to your kids, and you're like, fuck them. Do they really want it, or do you know if they want it, or are they earning it, or are they going to show an interest? He was very much the same. At that age, his kids weren't interested in the portfolio, so they didn't show any interest in that. He was like, well, what's the point in keeping them? I think he was keeping 6 just to top up his retirement.
And did you say you met him?
I met him a couple of times, yeah.
And you obviously got to know his reasons. There's always a why and a pain points and stuff like that. So you're understanding his motivations. His
wasn't a real crucial motivation. I think he's wanted to tie up his estate and tidy up his estate before he passes on. And he knew his kids didn't want them, didn't want the hassle, didn't want the legacy. So he thought, I think he'd keep him 6 for him and his wife to probably enjoy holidays from the rental income from them. But yeah, he didn't. There wasn't any huge great need, whereas
he wasn't desperate. Which is probably why he initially tried to do it for a few people and then put it to an agent. Because if you're going to the open market, and you're getting an agent involved, then you're probably not that desperate, right?
Yeah, well, that was it. I mean, the first conversation I ever had with him was through a friend of mine, probably 2 years ago. Probably over that, and he wouldn't go below 10%. And then when I said, look, I'm not even thinking about it unless it's at least 25, and he says, well, I might come to 15, and that was it. The conversation was dead. At a £4 million portfolio, you're fucking way off the mark here. So then obviously it came back round through another contact in the same conversation, and then he was up at 15% discount. So you can see that the more and more he flirted with this idea of trying to sell this portfolio, that he knew that unrealistically he thinks he could sell for a 10% discount. Whether it be not understanding the Aberdeen market, I mean, and generally you're limited with people that are going to buy a £4 million portfolio.
I know I can hear the listeners right now saying, Nick, you need to start asking about the numbers, drill into the numbers, but we're going to leave that for another episode because we're going to get the authorisation of your business partner.
Let's bring in Sam because we can go deep on it, because it's quite an interesting case study as well.
This is more general, just about the process of buying portfolios. And I hear quite a lot, and this comes from the education space and podcasts that I listen to. I hear the line that people say to you, well, whether or not whether you're buying one property or whether you're buying 30 properties, it's pretty much the same amount of work. But it doesn't sound like that to me.
No, it's probably bullshit. But then on my workshop, this is property. Right. You like that plug, Nick?
You can give yourself a plug. I don't mean.
No, we actually focus, when we're talking about buy-to-lets, we focus on this as a strategy. I kind of think that the time of buying single properties one at a time, with what we're going through in the tax the last few years, I think that it's a slow, painful process, and you'll probably burn yourself out with the fact that you won't reach your full potential.
But is that realistic? This is my issue with it. Honestly, if I go on Rightmove, Portfolio, put a post on LinkedIn, Instagram, am I going to get... I don't see the portfolios out there.
You're going to see them. Like you had Mark Shannon talking about the market update earlier. He's talking about the percentage of landlords he knows that in his letting agent business is going to exit. You'll have the same. You'll have landlords in your letting agent, and you guys are the ones that are at the forefront of it. You'll be able to see the opportunities before I get them.
People say that, but honestly, right? We've managed 200 properties. How
many's got 6 or more?
I don't know off the top of my head. We've got about
handful of people.
We've only got about maybe 6, maybe a 10,
10 and proper investors.
6 to 10 investor portfolio landlords probably.
So out of the 10, is any of them tired that are coming to a stage where they're wanting rid of them?
Well, no, because I'm relatively new to the lettings. So I started my business in 2018.
So you've built up the guys' portfolio.
I've built up the people that are sort of building the portfolios, similar to sort of our demographic.
So what about your agents in and around Glasgow that have had
exactly?
I don't know how long Susan Actimel,
the traditional, the more traditional letting agents, who you might find. Well, that's a good shout.
So if you've got a good relationship with another letting agent who's been a letting agent in Glasgow for 15, 20 years, they'd be the ones you'd reach out to and say, look, I'm wanting to scale up my portfolio. If you've got any landlords that are looking to sell up your stock, let me know. Now, to incentivise them, why not keep? I know you wouldn't, but one of my ways to incentivise them is you keep the management. If you bring me a client, my strategy is to improve the properties, make them more modern, easier to rent, easier to maintain. Like, we want to put the money into increasing the asset value and making sure they're good quality properties. So that benefits the agent as well. Plus, if they get more rent for that property, they're getting more management fees. And obviously they're not losing the stock. But if they don't have that open mind to evolve them with the times, and they say, okay, that landlord's going to sell off 10 of these properties over the next few years, if that agent was then incentivized to say, well, I'll tell you what, if you speak to the landlord, I'll buy his 10 and you can just keep them under management. Their stock's not changing, their stock level's still staying at that point.
I agree. It's about obviously getting the word out there, speaking to letting agents. I think that if you're trying to punt that strategy to brand new people starting out, I don't agree with it, because
no, I don't agree with it either. And this is
it works for you because you've got a track record.
Yeah.
You and Sam have been in the game a long time. You've got a portfolio already. Chris Minchin can vouch for you up in Aberdeen locally. You're well known.
But we've got a guy who's on this as well, that he's just buying a portfolio 8. I think it's this week or next week that's gone through. I think he's got 6 in his portfolio. So he's bought individual properties for the last 3 or 4 years. He's cut his teeth. He's learned how to do it. He's got his experience now. He knows what he's doing. Now he can do the due diligence on an 8 property portfolio. Obviously, he's got the backing of myself and Sam to come back and ask us, and we'll make sure their due diligence is okay and help them along with it. But there's guys that do it, and like we had Barry Gray on the podcast as well. Like, these guys are seeing the bigger picture of it. I've only got 20 or 30. Do I take 15 years, or do I just take 3 or 4 years, and the portfolio can actually work harder for me for a longer period of time, rather than get to that point where I'm tired of now benefiting from the portfolio and it's going to take me a while to benefit from it. Just get that a bit quicker. And obviously the unique opportunities that's presented itself right now is lining up to take that opportunity on and scale up your portfolio quicker. But I completely agree with you. And we do it on the workshop that we talk about getting 4 to 6. Yeah. Just go for 4 to 6 single units. Get the units in, and if you've got that, you understand the processes. You know what it's like just buying a property. Like, you don't know what your solicitor's going to ask you. Pick up the phone and ask you, send you an email. Oh, what the hell am I signing for that? Once you understand that all these wee processes, dealing with the buy-to-let mortgage, dealing with a set of accounts, dealing with accountant, dealing with all the compliance of the property, dealing with any maintenance issues. Once you've got that bit of experience for a year or two, then what's different from buying 6 the next time rather than buying 1? Because you're just going to do the due diligence on 6 of them. Understand the situation. You've put yourself in a place as well where your network allows you to buy it. You know what I mean? You're going to have opportunities coming to you.
Okay, finishing off on the downsides then, because it just sounds too good, this buying portfolios. So we've got to just wait up, Obviously, higher interest rate environment at the moment, that's going to affect the viability of it. Definitely.
The two downsides really are the rental income. Rents are capped. We can't put the rents up. So historically, even if you're buying a tenanted property, your rent's most likely going to be lower than market value.
Yeah, that's a huge problem.
So that wouldn't be an issue normally. But because the interest rates are now fucking shooting up through the roof, we've now got to pass a mortgage stress test.
Especially if the tenants have been in there for 10 years.
Imagine the tenant's been in there 10 years and you've not put the rent up, or you're
ain't going anywhere.
£300-400 a month less than market rent, and your mortgage lender's going, no, we need the rent to be at £900 and you're only at £500. Like, you're missing the stress test. So that's a big part of the due diligence. That's a big part of the process. But then this is probably where the risk versus reward thing is. If you can mitigate that risk short term and play for the long term, we've spoken about this 17 times on the podcast, that you're in property for a long term. You're not in property to try and squeeze the rent, maximise the rent, make huge cash flow from day one. You're in it for the long term, for
The
guaranteed
problem with
assets.
that one is the Scottish government their long term strategy is to cap rents permanently.
It's through landlords.
So no, I get you. No,
I mean, yeah, you are right. The two downsides, definitely the rent caps, the eviction bans, because you can't manage the tenant out as easily as you could have before, and then obviously the mortgage rate's gone up for the stress test. But then the acquisition stage, I was telling yourself and Mark off air before, the interest on the bridging loan for this £4 million portfolio is 9.6%. Now, a year ago, that would have sounded quite terrifying. That's not that much more than mortgage rates right now. So to carry out the acquisition and lend based on valuation and not purchase price, you're needing a hell of a lot more money. You've already effectively bought in the equity by the huge discount you've got. You just need to fucking get over this pain point right now of the rents being low, the stress test for the mortgages, and see a bigger picture, see a longer term view on the whole thing.
Yeah,
but it's not going to be a get rich quick thing. That's for sure. You've bought in, a good chunk. I think we bought in like almost £1.2 million of equity on that portfolio. We won't be able to realise that for the next 5 or 6 years, maybe 10 years.
But I don't think it's any secret. Sam Dyer posted on his LinkedIn or his Instagram the actual screenshot of a photo of the actual bridging loan statement. What is it per month?
21 grand a month.
21 grand a month. And the funniest thing was on LinkedIn, the guy Steven Clark, who we've actually got coming along to the networking event in Glasgow. Another Steven Clark.
The fake Steven Clark.
There's only one Steven Clark. So from Together, who does the bridging loans and that, he chipped in LinkedIn as well, and he's like looking forward to those payments rolling in or something like that. Do you know what I mean?
Brilliant.
Rubbing his hands.
I can imagine. I wonder if he's on commission for that.
But obviously the aim is quite quickly to try and get off that.
Well, that's it. We've been in the portfolio for almost 4 weeks, but we've got 31 properties earmarked for lenders in the blocks. Because obviously, this is another issue that I probably should highlight with the portfolios is you've got a concentration issue for buy-to-lets. They won't lend. The one lender would only lend a maximum of 4 in a block at 8 or 50% of a block or 4 in a certain postcode. So you have to get
They won't lend in Aberdeen, let alone the block.
Imagine that. Scotland, Aberdeen, portfolio, the concentration issues, the valuations, the stress test, and you've got a whole lot of tips to jump through. So for 4 weeks, we've pretty much put together 31 mortgages we can exit before the 6-month rule. So if we can if we can get the submission in this week, we should be able to exit the bridge fairly quickly on it. But it's funny because I was speaking to Jerry Alexander a few weeks ago, and we're talking about the things that the growth and you stretching yourself. Me stretching myself in December buying that HMO block with a bridging loan. It was like 5 or 6 grand a month bridging loan. I was like, holy shit, this is terrifying. But the portfolio can substitute it. It's fine. I can get by for this 6-month period. Then right at the back of that, like a month later, we're buying this 39 unit with 21 grand a month bridge, and I was like, fuck me,
what's next?
Like, what's next? Like that. But yeah, it's all relative. You just factor in the numbers into the deal. You just have to make sure that the numbers are working.
Brilliant. No, it was good. I think hopefully that's a good insight to the audience, about the process of buying portfolios. And I definitely see the value in it. Obviously, you're cutting down, you're growing your assets a lot quicker,
and it's easier to get the discount that we require. I suppose if you're wanting to buy it with little to no money, you need big discounts, and to do that, you're needing to find these niche opportunities, and that's definitely. And
coming into this era of like you say, just tired landlords with all this legislation and red tape. A lot of I do get feedback from older landlords saying, "I've just probably had enough." Coming up shortly, probably this year, second half of the year, I will maybe see a few more people selling up.
We spoke about the political landscape of it as well, and is that an important factor to discuss? That the government clearly, with their beating of landlords, let's say, but they're obviously still encouraging big corporations to buy and have massive portfolios. Well, your Lloyds banking and your...
You say that, but a lot of them have been scared off by the rent control measures and that. So the big build-to-rent schemes and all that were supposed to keep getting put, a lot of them are on hold at the moment. Right. Because they're scared of the government stuff and what they're actually doing with the rent controls, because that obviously affects their ability to get the return from their investors or their pension funds and all the rest of it. Do you know what I mean? So again, that's where the government are fucking the whole thing up. Anyway, you'll get me started on a rant.
Do you know what? It's interesting, and there is an opportunity for portfolios, but you still have to proceed with caution. Make sure you're speaking to the right people. Make sure you're doing your right due diligence. Make sure you're speaking to the right people that have done it before as well.
And probably not want to start off with don't start private messaging me on, as a letting agent. I do get the messages, people that have come straight out of the courses who are like literally just, they've put on their...
So I'm telling you, go and message Nick.
Their nice wee picture with their 3-piece suit, and they're a 7-figure, they're usually a 7-figure property investor.
Right.
It's always got to be 7 figures.
Right. What's wrong with 6?
6 is just not big enough, mate.
Right.
I'm only going to take them serious at 7 figures. Right. And it's like, any portfolios, have you got any, do you deal with any portfolios for sale? Probably coming off the back of your course.
Probably, quite possibly.
Anyway.
Right.
Hopefully that's some value. Thanks again for listening, guys. Subscribe to our YouTube channel, and hope you get some good value from the content. Speak to you soon.
Thanks, guys.